Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. Cryptocurrency investors haven't had the easiest run over the past few months or year or so. Bitcoin fell dramatically from its peak 18 months ago, and the reputation of the whole crypto space took a major hit from the collapse of trading platform FTX. But things seem to be looking up, with Bitcoin's now recovering its value since the failure of Celsius and FTX. I wanted to have a closer look at the sector, the outlook and the mood right now among crypto investors. Of course, this is general information only, and you should certainly seek professional advice before making investment decisions. Josh Gilbert is a market analyst at social investment network eToro, which is a supporter of this podcast. Josh, welcome back to Fear and Greed.
Thank you for having me back, Sean.
Been quite the ride for crypto investors, hasn't it?
Yeah, I think that's a modest way to put it. I think we could maybe even go as far to say it's been a pretty wild roller coaster over the last sort of 18 months. You know, we saw a 65% fall for Bitcoin in 2022, but that's a complete turnaround for what we've seen this year, where the asset's up about 82%. So we've certainly seen the ups and downs.
So just sort of take us through that last 6 months, or since the failure of Celsius and FTX. Why have cryptocurrencies, and Bitcoin's a good example, obviously it's the biggest cryptocurrency, why have they bounced since then?
Also, I think the main driver of this recent rally that we've seen has been the expectations of a faster fall in inflation and a sooner than expected cut to rates, particularly in the US, with investors therefore feeling they can be more confident in sort of taking on risk. And if we go back to, say, at the start of March, where the real sort of start of this rally came from, right at the start of March, we had the expectations for at least a few more hikes coming from the Federal Reserve and the expectations of absolutely no rate cuts this year. Well, fast forward to now, that's significantly changed. And that's why we've seen such a significant rally from crypto. We obviously broke through a significant barrier in $30,000 over the last week or so. That's been sort of building up for the last sort of few weeks. And that's really important for a number of reasons. And the first one is because it's a huge psychological level for investors. When you're building up to a big resistance level, whether you're in stocks or crypto, and you sort of break through that, for an investor's mindset, that's huge. And the second is that it's also a big barrier because this is the highest price that we've seen since the issues that we had last year. So from Luna to FTX, and we are now back above that. So that's a big milestone in that sense.
Why do people hold Bitcoin? Obviously, you have speculators, but there's many more people in cryptocurrencies than just speculators. What is it? Is it the fact that it's a play against inflation? Is it a risk on asset? What is it? What's the reason people hold it?
Yeah, and that's a great question because I think there's plenty of different answers to this. So as you say, there's the speculation, there's the idea of this asset being a store of value, given that it has a finite supply, only 21 million Bitcoin in issuance. As we say, that there then obviously gives it the factor of being a hedge against inflation. But also more recently, I think that has helped highlight Bitcoin's fundamentals is obviously the banking issues that we've seen play out in the US over the last sort of 6 to 8 weeks. That has helped, I think, lead the narrative of investors turning towards decentralized assets when centralized systems fail. And Bitcoin has proven to be a store of value that doesn't see investors face issues that we have seen from holding capital in a bank. And again, when those banking issues were occurring, Bitcoin continued to sort of do its thing. It settled transactions in seconds. It allowed consumers, access to their capital with, no middleman, no centralized system. I think that's really important. More than ever, people are wanting to take control of their finances. More people are wanting to essentially become their own bank. I think we're a long way off of this being global adoption, in the sense of that happening. But I think over the last 2 years, when we go back to things like geopolitical tensions thrown in there as well, now these banking issues, people are turning away from centralized systems and, as I say, want to take control of their finances. So there are plenty of reasons, why people hold Bitcoin, but just more recently in the last 6 to 8 weeks, it's that idea of owning your capital and being in control.
Stay with me, Josh. We'll be back in a minute. I'm speaking to Josh Gilbert from eToro. And has the cryptocurrency sector been cleaned out over the past 12 months or so? And I say that in a positive sense. There was a period there where a celebrity would put out a cryptocurrency and, to rise and fall ridiculous amounts. Elon Musk would tweet things, and actually there's a bit of that going on still. But is it actually a better sector now in a sense?
I think so, yes. And I think that the way that the industry has transformed over the last 12 months is certainly for the better. And I think what we've seen in terms of the outperformance in Bitcoin compared to altcoins shows that. So, altcoins, we consider those as the smaller assets.
So just define for me what altcoins are.
Yeah, so essentially it's an alternative coin. So essentially it's an alternative coin to, say, the larger assets that you may get, such as Bitcoin, Ethereum, Cardano, those sorts of assets. So it's a smaller asset that, is maybe up and coming. Think about it, maybe similar to a stock that IPOs, or that is a bit of a disruptive tech stock. That's how we could sort of consider it. And it's the same way we see it with stocks, right? In an environment where if investors are feeling a little bit uneasy, they will turn to those bigger assets. They'll turn to big tech and they will sell out of disruptive tech. Well, it's the same thing that we've seen in crypto. Investors are less willing to move into those smaller crypto assets and instead are seeking haven in assets such as Bitcoin and Ethereum. And that is evident this year because Bitcoin is outperforming those smaller altcoins in this current rally, which, given previous rallies, is actually unusual. It's usually the other way around. We usually tend to see those smaller assets outperform. And as you say, I think when something fails, consumers, get worried. And I think that's the case with everything. I think in terms of the regulation, as you say, has sort of stepped up in terms of, weeding out those bad actors. And I think that's great because that is fantastic for educating and protecting investors. But I think it also should help find that balance as well between allowing this technology to sort of thrive and deliver real benefits. So there's a balance there. And I think that as long as we can find that middle ground, then we're going to be okay.
And presumably the longer that digital currencies survive, the stronger they become, or at least the stronger the better ones become.
Absolutely, yeah. So I think in terms of adoption, that's really important. So if these assets have use cases and they have something that they can provide to an everyday society, then they're going to be here for the long run. I think I use Ethereum as a great example because it's what we would probably look at as the pinnacle of decentralized finance. It's sort of trying to revolutionize how we look at digital finance. It's basically the sounding board for much of what goes on in decentralized finance. And I think that's really important for a number of reasons in terms of, as you say, that adoption and these assets growing. We've seen a bit of a slowdown in the last sort of 12 to 18 months with institutional adoption, which is fair given, I think, what's happened in the industry. But that is going to be, a key catalyst, I think, for us to move to that next level. Retail investors can only move this asset so far. Institutions are that next step. And I'm talking about, your BlackRocks, your Fidelities, et cetera, to move it to the next level.
Yeah. What about regulation? Is that something that investors should fear, or is it actually something that puts parameters around it and could help good digital currencies?
Yeah, I think at the moment it is worrying investors. There's a lot of conversation around regulation across the broader market over the last 4 months, especially this year. And I think that just comes from what we saw last year, which, given, I think it's completely fair question marks from regulators to ask, right? There was unfortunately a lot of people that were affected by what happened in 2022. So we knew that there was going to be more scrutiny for the sector. But I think in terms of regulatory measures that are explored, as I said earlier, I think as long as we can protect investors and educate investors, then I think that's the key here. And we really want to sort of see this asset help to deliver benefits to the financial service sector, but also help to facilitate, greater financial inclusion globally as well. And maybe it's not that we have to rely on centralized systems. Maybe we can use decentralized systems, but that's not going to happen for a long time until we can actually trust what's going on from a decentralized standpoint, right? A lot of people getting into crypto would have thought, oh, if I'm investing via Luna, it's decentralized and I have access to my own money. Well, that's not always the case. And I think that just comes from education, which is what, we are really trying to do. And I think what regulation can help with, but it really has to be done in the right way.
Finally, central bank digital currencies. I never quite know where they fit in the spectrum of what we're talking about here.
Yeah, well, look, it's a good question because, they're still being explored. They're still being, investigated. I think the US have put out a bill to sort of look into it. We've seen, China sort of probably lead the way in that sense with its digital yuan. They've sort of been in development for that for a long time. I think the difference that we're seeing with CBDCs is that it kind of goes back to that idea of being centralized. You're going back through a centralized system again, where yes, it's a digital currency, but it's still controlled by a central bank. It's essentially what we're looking at here is, I think the pandemic highlighted more than ever the use case of digital assets. I think that comes from the consumers and businesses wanting access to assets, money, and fast, right? I think we saw that with the stimulus that we saw from central banks across the globe. We know that these assets can be sent and received much quicker than traditional, fiat currencies that we have right now, such as the payments networks that are already in place. And I think there's a long way to go. I'm not sure that they will sort of really change everything. There's definitely a long way in terms of, implementing these. As I say, I think in a way, it can make digital currencies be very, very centralized. And I don't think that's what crypto is about. But there's still going to be years and years, I think, of investigations and research into these assets before they're really rolled out by central banks. But they're certainly being explored, that's for sure.
It is a great space. Josh, thank you for talking to Fear and Greed.
Thanks for having me.
That was Josh Gilbert, market analyst at social investment network eToro, which is a supporter of this podcast. This is the Fear and Greed Daily Interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.